There is a sentence that has never once appeared in 89 years of Rowe Price paperwork, until last week. Somewhere in a regulatory filing, in plain language, one of the most conservative money managers in American history just told the federal government it wants to put Dogecoin inside your retirement account. Sit with that for a second. Not a hedge fund chasing headlines, not some app built last year. Rowe Price, the firm that built its entire brand on being slow, careful, and almost boring on purpose. The firm millions of regular people trust without ever checking the balance, because they assume it is parked somewhere safe. That firm just got the green light from the SEC to actively manage a crypto fund. And buried inside that fund, sitting in a bigger seat than almost anyone expected, is an asset a huge chunk of this audience has been holding through years of sideways price action and constant doubt. XRP. By the end of this video, you will understand exactly why this one approval might matter more than any single headline XRP has produced all year, what the real numbers inside this fund actually look like, why the timing lines up almost perfectly with a separate piece of legislation moving through the Senate right now, and why the price chart is telling a story that does not fully agree with the hype. Stick around because the middle of this breakdown is where it gets genuinely interesting. Welcome back to Crypto Shockwave. If you are new here, this is the channel that breaks down what is actually happening with XRP and Ripple, away from the noise, every single day. If that sounds useful, the subscribe button is sitting right there and it costs you nothing. Let's start with the announcement itself, because the details matter far more than the headline. On June 12th, the SEC approved a rule change filed by NYSE Arca that clears the runway for a fund called the Rowe Price Active Crypto ETF, trading under the ticker TKNZ. This is not a simple Bitcoin tracker sitting on autopilot. It is an actively managed fund, which means a human team at Rowe Price gets to choose between 5 and 15 digital assets from an approved list and shift the weighting whenever they believe conditions justify it. That eligible list includes the obvious names, Bitcoin, Ethereum, and Solana, and then stretches surprisingly far down the risk curve, all the way to Dogecoin and Shiba Inu. Here's the part that should stop you mid-scroll. When the actual allocation came out, Bitcoin sits on top with just under 42% of the fund. Ethereum holds second place at roughly 18.5%. And third place, ahead of Solana, ahead of Cardano, ahead of nearly everything else on that eligible list, is XRP at 11.42%. Solana, the coin most analysts assumed would take that third slot, actually landed in fourth place near 8.66%. Dogecoin, despite all the attention it gets online, sits much further down near 4.5%. Read that allocation one more time. A firm that built its entire reputation on protecting pension money just told regulators, in writing, that XRP deserves a bigger slice of a crypto retirement product than Solana, than Cardano, than almost everything else on that list except Bitcoin and Ethereum. That is not a retail trader's hot take posted at midnight. That is an Institutional Risk Committee's decision, filed with the federal government for anyone to read. But wait, before anyone gets carried away here, it is worth being honest about what this approval actually means today versus what it means eventually. SEC approval of the listing rule is not the same thing as the fund opening for business tomorrow morning. Rowe Price still has operational steps to finish before everyday investors can buy a single share. This has been a slow walk since the original filing landed back in October of last year, through multiple amendments earlier this spring, before finally clearing this month. So the realistic outcome is a launch later this year, not an overnight flood of new money. The opportunity is real, the timeline is patient, not instant, and pretending otherwise would set you up for disappointment. Now here's why the timing of this story matters so much more than it first appears. While Rowe Price was finishing its filing, the Clarity Act, the piece of legislation meant to finally give digital assets a clear regulatory home in the United States, cleared the Senate Banking Committee and was placed on the Senate's calendar for full floor consideration. That does not mean it is law yet. Senate leadership still has to schedule an actual vote and merge the Banking Committee's version with a separate Agriculture Committee draft before anything gets signed. But think about the optics for a second. A major Wall Street name is rolling out a crypto retirement product in the exact same window that Congress is working through the rule book that would make digital assets dramatically easier for institutions to hold long term. Either one of those stories on its own would be a solid headline day. Both landing in the same handful of weeks tells a different story entirely. One where traditional finance has stopped waiting for permission and started positioning ahead of it. And that is exactly why a fund like this carries more weight than a typical news cycle. Most crypto headlines fade within 48 hours because they are driven by traders flipping positions for a quick exit. Retirement money simply does not behave that way. There are two very different worlds inside the retirement system. One is the defined benefit world, the old-style pension plan, where the institution itself decides what to hold, and crypto access there has existed in small pockets for a while. The other, much bigger world is the defined contribution world, your standard 401k, where regular working people choose from a short menu of funds, and almost none of those menus have ever included crypto exposure. That second world is where the overwhelming majority of retirement dollars actually live, and it has been almost completely locked out of this asset class until now. When a dollar lands inside a 401k or an advisor-managed account, the average holding period is measured in years, sometimes decades, simply because most people never touch that account until retirement. If even a modest slice of that capital starts flowing into a fund holding XRP, that is patient, sticky money sitting on the ledger for the long haul, not a speculative bet that exits the second the price wobbles. Stop right there for a second, because I want this to land the right way. None of this means XRP is guaranteed to skyrocket, simply because one asset manager built a fund around it. Markets do not work that cleanly, and anyone telling you a single ETF filing locks in a specific price target is selling you a story, not giving you an analysis. What this approval actually does is remove friction. It hands financial advisors and everyday savers a regulated, familiar pathway into XRP exposure without ever touching a crypto exchange. That is a meaningful structural shift on its own, even if the price chart refuses to react to it overnight. Speaking of the price chart, let's talk about what is actually happening on it right now, because the technical picture is far more nuanced than the headlines suggest. XRP has spent the last several weeks boxed inside a tight range, roughly between $1.25 on the low end and somewhere near $1.45 on the high end. After a sharp pullback earlier this month dragged the price back toward the low ones, buyers stepped back in hard. A rally tied partly to easing geopolitical tension after the United States and Iran reached a deal pushed XRP up by close to 9% in a single session, with large holder wallets adding to their positions throughout the move. On-chain data shows whale addresses climbing toward record levels, and that kind of accumulation usually signals confidence building quietly underneath the surface, rather than panic spreading on top of it. The monthly RSI reading on XRP has also dropped into territory rarely seen for this asset, the kind of reading that has historically marked oversold conditions, rather than the start of a deeper collapse. That does not guarantee a bounce, and here is the honest bear case, because a balance breakdown means giving it real weight instead of rushing past it. If XRP fails to clear resistance near that $1.30 zone with real conviction, the same chart structure that supports a recovery thesis also supports a slide back toward the high 80s, especially if broader crypto sentiment turns again or Bitcoin drags the rest of the market lower with it. The bulls are not wrong to be excited about the setup. The bears are not wrong to stay cautious about the same setup. Right now, the chart genuinely has not picked a side, and a channel that only ever tells you the exciting half of that story is not doing you any favors. So here are the 3 things actually worth watching from here, instead of just reacting to whichever headline lands next. First, watch whether XRP can close decisively above that $1.30 resistance level on real volume, because that is the line separating an actual trend shift from one more fake out inside the same tired range it has lived in for weeks. Second, watch the Senate calendar closely for any sign of an actual scheduled floor vote on the Clarity Act, because a confirmed vote date would do more for institutional confidence than almost any single green candle could. Third, watch for the operational announcements coming out of Rowe Price itself in the months ahead, because the gap between SEC approval and the fund actually opening its doors to investors is exactly where a lot of the real money decisions quietly get made. Here is the bigger picture worth sitting with after all of this. For years, the loudest argument against XRP from skeptics was that it lived in a regulatory gray zone, too uncertain for serious institutions to risk client money on. That argument gets harder to defend with every passing month. When one of the most conservative wealth managers in American history places XRP ahead of Solana inside a regulated retirement product, the old narrative does not just weaken, it starts to look genuinely outdated. Markets never move in a straight line, and nobody watching this honestly should expect some overnight parabolic move just because of one filing. But the direction of travel, institution by institution, filing by filing, keeps quietly pointing the same way, and that pattern is worth more than any single day's candle. It is a strange kind of full circle moment if you think about it. The same financial establishment that spent the better part of a decade treating digital assets like a fad for basement traders is now writing prospectuses that put a meme-born dog coin and a battle-tested payments token inside the same retirement fund as Apple and Microsoft index trackers. Old money does not move like that for fun. It moves like that when the math finally forces its hand. If this breakdown helped you actually understand what just happened, instead of leaving you to piece it together from a dozen conflicting headlines, that is exactly what this channel exists for. Hit subscribe so the next update finds you the moment something real moves. Tap that like button if this was useful, and drop your own read on where XRP heads from here in the comments below, because some of the sharpest calls on this channel come from the people watching, not just from me. We will be back with the next breakdown soon. Until then, stay sharp out there.